Welcome, everybody, to this Thursday edition of Inside India. I'm Sri Jegarajah. Your headlines: Fed Chair Jerome Powell warning tariffs will hurt growth, but is ruling out a Fed put, while the World Trade Organization warns further US trade action could lead to the biggest slump in trade since the COVID pandemic. India's trade deficit with China widened to a record high last month. Concerns of dumping as US Vice President J.D. Vance heads to India in the coming days for trade talks. Wipro warning that tariffs are causing a lot of demand uncertainty in India's vast IT services space as it posted a drop in quarterly revenue. Right, Indian markets join us in about 45 minutes' time. Let's just review what we learned yesterday in the markets, because the setup does look reasonably constructive. Nifty 50 yesterday closed above 23,400. You can see that on the screen. So that marks a two-week high, and again for the third consecutive day. So that's where we kick off from. As far as Nifty futures are concerned, we're looking at a move in the region of about 23,385. So that does suggest perhaps a little bit of selling after yesterday's strongish close. And let's give you the dollar rupee rate as well, 85.5630. Price action has been choppy lately for the Indian rupee, pulled in opposite directions in a post-tariff environment, but it looks as though it's settling into a short-term trading range of between 85.50 and 86.50. Let's take a quick look on how US futures, equity futures are shaping up. It looks as though it's going to be a positive session, although obviously a lot rests on two things: the flow of the tariff headlines and what earnings tell us as well. And of course, Fed policy outlook. And speaking of which, comments from Fed Chair Jay Powell hit sentiment on Wall Street overnight. All three major indices ended lower, with techs bearing the brunt of the sell-off. Worthwhile also checking in on US Treasuries, considering where things were just a week ago. The benchmark 10-year yielding 4.3097. Chair Powell warning that the central bank could face difficult trade-offs in the current trade war, but he declined to commit to quick action to soothe the heightened uncertainties, taking a wait-and-see approach.
We are well positioned to wait for greater clarity before considering any adjustments to our policy stance. We continue to analyze the incoming data, the evolving outlook, and the balance of risks. We understand that elevated levels of unemployment or inflation can be damaging and painful for communities, families, and businesses. We will continue to do everything we can to achieve our maximum employment and price stability goals.
And a warning issued from the World Trade Organization on global trade. Based on tariffs right now, the WTO sees trade volumes dropping 0.2% this year. Big reversal from the 3% expansion it had previously estimated. But if the US were to reimpose its full breadth of tariffs, that, along with all the spillover effects, could lead to world trade contracting 1.5% this year. That would mark the sharpest decline, if it materialized, since the 2020 COVID pandemic. So that's the context. And its bigger fear is of a US-China decoupling that would lead to a significant and substantial 7% long-term contraction in global GDP.
We currently estimate that merchandise trade between the two economies will fall by 81%, a drop that would have reached 91% without recent exemptions for products such as smartphones. So without the smartphones, 91%, with that exemption, 81%. And this level of a drop in US-China trade of the magnitudes we are talking about is virtually tantamount to a decoupling of the two economies.
Against this backdrop, China is hedging its bets in the escalating trade war. President Xi Jinping is heading to Cambodia today after signing multiple deals with Malaysia. JP Ong was in Putrajaya yesterday and joins me now. JP, give me your takeaways on Xi's trip and what can we expect from the rest of ASEAN?
Absolutely. And again, this is a goodwill tour of some sorts, an attempt to try and shore up existing and warm relations in Southeast Asia and to make warm relations even warmer. Leading up to this, we heard this here from Chinese President Xi Jinping, who said that he's hoping for another 50 years of golden relations, that is, with Malaysia, and also called on Malaysia to stand side by side with it to oppose what he said was a decoupling of the global trade order and also to oppose moves towards unilateralism and protectionism. Prime Minister Anwar Ibrahim also called China a reliable partner and said he actually views favorably the unique worldview of President Xi Jinping, who says looks more outward than inward. But of course, this is also about a lot of the deals that were signed in Malaysia, a little bit different from the 45 deals that were actually signed in Vietnam. This time, they revolved around investments and technology. According to the Prime Minister, the Trade Minister, that is, of Malaysia, Tengku Zafrul Aziz, a lot of the major MOUs actually revolved around possible tech collaboration, also collaboration in artificial intelligence, and could also set the stage for more Chinese investments in the semiconductor space, which is an area that Malaysia really wants to develop and evolve in with regards to moving up that particular value chain. Now, he will be heading to Cambodia later on today to wrap up this Southeast Asia tour, Sri. And the other thing with Cambodia also is not just that China happens to be one of their biggest trading partners also, but because they also have very strong defense and security links with Cambodia. They did backstop, that is, the development of the Ream naval base in Cambodia, which has led to concerns that China could also use this as a possible launching pad into Southeast Asia. And of course, they've also funded a number of big infrastructure projects in Cambodia, such as the airport, for instance, and also other aspects such as railway links within that country. So again, this is what we're going to be watching out for today. So deals and more affirmation of ties, that is, with Southeast Asia, it seems to be on the cards, and it's imperative for Chinese President Xi Jinping and the leaders in Southeast Asia.
And it's got a whiff of BRI about it, hasn't it? Or rekindling the BRI, and that brings with it that strategic imperative, and that's why ASEAN and some members of ASEAN are looking quite warily at this, especially if defence is part of that strategic cooperation. JP, excellent. Thank you very much indeed for that. Now, Xi tries to woo ASEAN partners. There are increasing concerns of Chinese firms diverting their goods to other markets. India's trade data showed a 25% year-on-year jump in goods imported from China last month. Most of these imports were electronics, electric batteries and solar cells, amounting to $9.7 billion. In the fiscal year 2024-25, India's trade deficit with China widened to a record $99.2 billion. And that is something that's likely to come up in the US-India trade talks. US Vice President J.D. Vance will be in New Delhi next Monday, and he's set to meet Prime Minister Narendra Modi and discuss, quote, shared economic and geopolitical priorities. India is planning to drop import duties on US ethane and LPG. This is also part of India's charm offensive to quickly negotiate a trade deal with the United States. India has been trying to reduce its trade surplus with Washington, which emerged as its largest trading partner in fiscal year 24-25. Japan is also moving swiftly on trade talks with the United States. And Lynn joins us now, and President Trump himself attended this.
Good morning, Sri. He did indeed. He flagged it in a social media post just hours prior to these talks. But as one trade analyst said to me, this is a real break from tradition and underscores the kind of importance that the US president is placing on these negotiations. In terms of what has transpired and what we have learnt from these talks, as expected, Japan is asking for those exemptions, and you would think particularly on that 20% 5% on the auto sector, and emphasising the contribution that the country brings to the US economy and jobs through that direct investment. We also heard from the Prime Minister Ishiba, where he said that while he is hearing that those talks were constructive, that he acknowledges that it won't be an easy road ahead. And he also says that he plans to visit Washington to hold direct talks with the US president at the appropriate time. So it definitely sounds like that it's not going to be a quick sort of deal to happen, that it could take weeks or months. Of course, lots of countries that are lining up to hold talks will be watching for, what is really on the table here and what is the US looking to get out of this trade deal. Perhaps there's a model ahead as well. We didn't get much detail on that front. What we do know, though, is that it sounds like military costs, Japan upping those costs, could be on the agenda here. For now, foreign exchange, the Japanese currency, was not discussed. Sri.
And thank you very much indeed for that. In the meantime, World Bank President Ajay Banga is calling on emerging markets to liberalise trade. Banga saying many developing countries maintain higher tariffs than advanced economies. He says lowering these rates could offset the risk of reciprocal import taxes. Banga also sees the tit-for-tat tariff war between the US and China contributing to a more cautious business and economic environment. Coming up next on the programme, we'll focus on India's tourism boom. How will tariffs affect the travel sector? We'll speak to the co-founder and group CEO of India's leading travel aggregator, Make My Trip. Stay with us. Welcome back. Let's turn towards India's tourism sector now. Travel within the country has recovered from COVID pandemic lows, and the rise of the middle class has led to more Indians taking trips both domestically and abroad. Booking.com and McKinsey expects Indians to become the fourth largest global travel spenders by the year 2030. But when it comes to tourists coming to India, many complain of a lag in infrastructure. The Indian government, however, is pushing the sector to leverage India's cultural heritage. Here's what Finance Minister Nirmala Sitharaman proposed in the annual budget back in February.
Top 50 tourist destination sites in the country will be developed in partnership with states through a challenge mode. Land for building key infrastructure will have to be provided by the states. Hotels in these destinations will be included in the infrastructure harmonized list.
Let's bring in Rajesh Magal now, co-founder and group CEO at Make My Trip. Rajesh, thank you very much indeed for joining me on Inside India. Can we start with the big macro question first? How do you think travel markets, both inbound and outbound, are going to hold up in this climate of global uncertainty?
Yeah, and thanks for having me. And I'll tell you, actually my view on the midterm and the long-term outlook for the travel and tourism market today just keeping aside the recent sort of volatility, uncertainty, thanks to this tariff situation, because that's still sort of, unraveling, right? So, nobody really knows where it is going to land, what real impact it is going to have, because, there's always, there's every day there's back and forth happening on that front. But if you really look at it just from a very fundamental standpoint, the fact that the India overall is growing, Indian economy has been very, very robust. In fact, recovered post-COVID very robustly. And the projections look very, very good. And on the back of, very strong macro drivers fundamentally. And one of them is, the rising middle class and the rising incomes with the middle class cohort and the upper middle class cohort. And specifically, let's say in the context of discretionary spend, it has only been on the rise on one side. And on the other side, again, keeping travel and tourism market in mind, the consumer behavior, the desire to travel, desire to explore more, not necessarily only in domestic market, but also international destinations. When we look at some of the data points that on our platform for the last couple of years, our frequent travelers who used to take maybe about 5 trips are now taking 6.7 trips in a year. And repeating short-term vacations, different new sort of use cases emerging, the celebration travel emerging, the pilgrimage travel emerging, the event travel around the events is emerging as a new trend as well. Like, people going and traveling and visiting places to watch concerts and stuff, and the infrastructure development that is happening in the country, right? So these are very fundamental macro drivers, which are sort of helping at least, for the recent, till the recent past that we've seen, even, the beginning of this fiscal year, because this happens to be a high travel season quarter for us. The start we have seen is actually not that bad. So we'll see what happens with this tariff situation, if tariff situation sort of aggravates. But overall, fundamentally, before that, sort of looked pretty strong.
Absolutely, and we're well aware of that Taylor Swift event and that event-driven travel demand here in Singapore. But is all of that at risk if the global economy does go into a meltdown because of the tariff uncertainty? And you mentioned discretionary spending, which is typically the first to go. So how diversified is Make My Trip, Rajesh, and how vulnerable or otherwise is the portal?
I think, there could always be a possibility, right? If the overall global economy, if this sort of continues, and this leads to, let's say, high inflation in US, leading to some sort of potential recession, impacting, various other countries, etc., or having some sort of side effects on the other countries as well. But if you really see India as a domestic market, in fact, the post-COVID recovery was a very good example of that. It's a very large-sized domestic consumption market, and India was able to actually recover despite all the odds on the back of a very, sort of big-sized domestic market. So I think relatively to the rest of the world, I do believe that India might still be, sort of better poised to weather any kind of storm. But of course, there could be potential slow growth rate and so on, that if that happens, if this persists. I also think, this situation, everybody is sort of busy at the macro level, country to country, trying to figure out and the solution for this current situation, right? So, and there may be new opportunities, there may be new relationships, there may be new solutions that might sort of come out of this difficult situation as well. And that might help, and whoever is able to do a good job at it at the country level might be able to sort of, mitigate some part of the impact of the overall meltdown if that happens. But sorry, I was just going to respond to your second part of the question. So from Make My Trip standpoint, we are fairly diversified, but within the travel, but travel, like a one-stop shop for all travel use cases, whether it's domestic or outbound. And, now we are trying to, thanks to our platform being compliant, GDPR compliant, also getting organic inbound demand as well. And all kinds of not necessarily highly discretionary use case, but also, we have bus business, we have, domestic cab business, intercity cab business, various ancillary business. So some sort of, at least within the overall travel, there is diversification, but but I don't really see, like I was saying, going back to my, sort of earlier point, I think there may be potential if this persists. There may be potential sort of growth slowing down.
Yes.
But relative to the rest of the world, given the size of the domestic economy here, we might still be better poised relatively.
Understood. Rajesh, can I go back to the roots of Make My Trip? Because you were founded in 2000 by Deep Kalra to cater to the travel demand of overseas Indian community in the United States. And I'm just wondering, is there any evidence of advanced bookings or forward bookings of visitor flows to and from the US market slowing down, given perceptions among Indian travellers of perhaps longer lineups on arrival, perhaps more stringent or even draconian visa regulations and restrictions, even applying to the travel sector and even applying for tourists? Is there any evidence of those perceptions hitting your forward bookings?
Yeah, you're absolutely right. We set up in 2000, and given that internet was not happening in India, we were focusing on non-resident Indian market, US-India corridor, and it continues to be there. And like I was mentioning, now we are getting some Indian diaspora organic demand from an inbound to India perspective as well. But let me tell you on this specific point that you made. Given that situation is so volatile and uncertain, we haven't really seen any, sort of knee-jerk reaction. There is nothing that has emerged so far, which is developing into a pattern right now, because everybody seems to be watching this space carefully, just waiting and watching. Yeah, there's a possibility, let's say people who were, sitting on a fence and they were looking to travel to that part of the world, they might be just holding on to it, which we will not come to know. But in terms of just the bookings that have happened already, or futures, or the any booking behavior from an advanced purchase standpoint, we haven't really seen a pattern emerging right now. Right. But if this situation prolongs, I guess it's early days right now, and given that everybody's sort of watching the space, because literally there is new piece of news on this topic every day, every morning, right? So, I think everybody is sort of watching and trying to absorb and saying what exactly is happening, and if there's going to be potential impact, direct or indirect. And maybe then we will see some, sort of pattern emerging, but so far nothing.
Understood. Your key industry metric is gross bookings value. What does that picture look like, Rajesh, on a 6 to 12 month timeline?
Yeah, 6 to 12 months might be very hard to predict, but I can tell you, if you look at any of the industry reports, the travel and tourism market for the next 3 to 5 years was supposed to be growing at high single digit or double digit, actually, if we get lucky. Right? So, I think we should start thinking about working backwards from there, given the current situation volatile, and if it continues to sort of stay like that and it starts to, going down southwards, then from there may be drop of the growth. But I don't really see that drop happening too much. And maybe this is also travel season for us. So this quarter we will get to know a little bit more. Yes. Because a lot of people actually end up in India planning either in summers for their holidays, the family holidays and stuff, or in the winters. And this is just the beginning of the season. So maybe, 1 month down the line, middle of the quarter, we will have better sense of how the consumer behavior is changing, if at all. There are no signs, as I pointed out earlier, seem like right now, because the first few days April were actually pretty good because there was a long weekend and people were all busy sort of planning their short vacation. Right. So we will know maybe sometime later, but I think midterm to long-term outlook, growth outlook still looks quite positive.
Understood. One of your investors is China-based travel booking company Ctrip, which some might find somewhat curious and perhaps unexpected given India and China's historic strategic rivalry. Is travel demand, and are travellers, Rajesh, therefore perhaps agnostic about all of this, especially in light of recently China simplifying the process for Indian tourists? Is there a quiet revolution going on in that corridor, India-China?
Well, if you look at the trade between India and China has always been there, actually, and it has always been sort of growing between the two countries. And the travel between India and China was largely focused on trade travel, not necessarily leisure, even historically. And that continues. I mean, notwithstanding, post-COVID, of course, there were some, sort of visa restriction, and country by country was opening up the borders, sort of slowly and gradually. And that pretty much happened across the globe. So frankly, I don't really see anything specifically. I haven't really seen any sort of evidence of that specifically to the trade between the two countries. And, I'm not necessarily going into any other issues, but specifically between, when you look at the trade data between the two countries and the travel related to that trade, that has always been happening. And I think it will continue to happen. I don't really see, like I said, you don't really see any data to treat that as an evidence to say or think differently.
Rajesh, Vice President Vance is making an official visit to India, and we have a sense that India may be in the front of the queue in terms of achieving a bilateral trade agreement with the United States. Do you see that those events as positive catalysts for the business and two-way travel demand?
Like I was saying earlier, in all fairness, this situation is obviously pushing every country to look at, how better they can negotiate, what is the possible opportunity, what is the possible solution, including developing new markets, new trade relations, etc. And I see no, sort of different initiatives that may be taking place from India perspective. And, I'm sure everybody is sort of doubling down and on it to try and figure out what's the best outcome for their own respective country in this overall sort of emerging global new situation. And wherever we are able to, and historically, India has been, for whatever it's worth, in the past, decade or so, been able to do actually a pretty good job from the top in terms of just, sort of looking at these opportunities, working out, even during COVID, whether it was a deal, oil and stuff, right? So I think we've been able to do quite well.
We have to leave it there, sir. Thank you very much indeed for joining us. Welcome back. You're watching Inside India. Quick look at how the Asian markets are performing. And it is looking reasonably positive. Nikkei 225 is putting on about 1%. 34,250 is where we are trading at the moment. There are some pockets of softness, but then again, let's call it a flat line for the Thai benchmark, the SET. The TAIEX also steady at 19,466. We are counting down to the market open in India. This is how we are shaping up. And yesterday's session and the setup is looking reasonably constructive. 23,437 is where we left off at the close yesterday. So that marks, I believe, a 2-week high and the third straight session of gains. Nifty futures are suggesting an opening number in the region of 23,394. So practically little changed at the get-go. Dollar rupee exchange rate at 85.50. Right, we are in the thick of earnings season. We will be watching for how Wipro shares open today. ADRs fell over 3% overnight as IT major forecast a weaker quarter ahead on increasing tariff uncertainties. Wipro is now expecting a revenue decline of between 1.5% to 3.5%. They're joining rival TCS in flagging concerns of a demand slowdown and a shift in decision-making by their clients. That slowdown in IT services firms has also sparked concern of layoffs in the country. IT services accounts for around 7.5% of Indian GDP. Job cuts by US big tech firms like Google and Meta have also added to these worries. Let's bring in Sanjeev Bikhchandani now, co-founder of InfoEdge. The company owns Naukri.com, India's largest employment portal. Sanjeev has also invested in multiple deep tech startups through the company's VC arm. Sanjeev, great to have you on the program. First of all, can I draw some macro insights from you? Job postings on Naukri.com, especially when it comes to IT recruitment, what is it telling us about where we are in this cycle? And is there any evidence of a slowdown here that's consistent with deeper layoffs in the sector?
So our numbers do not show any evidence of a slowdown just yet. Of course, we are watching the TCS results, the Wipro results, keenly to try and predict the future. But as of now, we are okay. Our job seeking index is up. Our billing numbers are on track. So we are okay.
What are the job postings telling you about the quality of IT sector jobs on offer? Because Piyush Goyal, Commerce Secretary, has raised some controversy with his comments. He's said that the entire ecosystem needs to step up. It needs to step up on innovation. It needs to think bigger. It needs to offer quality jobs to Indian graduates. Is he right? And are we still seeing the IT services sector offer jobs that are consistent with delivery boys and girls, as the Commerce Secretary has said?
I think everything you hear about India is partially true. So yes, are there jobs for delivery boys and girls? Yes, there are. But are there jobs for programmers and AI engineers? Yes, there are. So everything in India coexists, and therefore everything is at least partially true. Now, the truth is that we are not seeing a slowdown in jobs just yet. We are obviously waiting and watching as the IT majors, as the IT services majors declare their results, because that impacts our business. But we will know next quarter or two what's happening there.
Absolutely. And the concern is if there is a growth scare in the US, and if it does spread globally, then that is going to impact the Indian macroeconomic environment, despite the resiliency that's associated with India in a post-tariff environment. Is there anything in the leading indicators that you are seeing, Sanjeev, that is consistent with that?
Not yet. Not yet. I think everybody's waiting. There's a 90-day moratorium now on the extra tariff, although there's a baseline 10% tariff, which wasn't there earlier. Obviously, everyone's concerned. Everybody wants stability and predictability. And everybody wants to go back to normal as soon as possible. So we are hoping that negotiations and conversations conclude. We are hoping there isn't a bad-tempered trade war between China and the US. We are hoping there's a settlement there. So everybody wants growth and stability.
Sanjeev, what's InfoEdge doing itself to invest in deep tech, AI, and advanced manufacturing? Because, again, Commerce Secretary Goyal has really been exhorting the Commerce Minister, Piyush Goyal, has been exhorting the entire IT ecosystem to be far more ambitious.
I think everyone will invest. See, you've got to let the market forces play out. So investors will invest in those sectors where they feel they can get but the risk-return trade-off is decent, is consistent with their goals and objectives. Likewise, individual entrepreneurs will, focus on stuff that they believe works for them. So while the system as a whole, the country as a whole may want to move towards more innovation, more deep tech, more AI, it will do so at a pace which is consistent with, with market forces. I think it's a legitimate aspiration for capital to seek a return. I think it's a legitimate aspiration for founders and entrepreneurs to do the business that they think makes sense. I think you have to let free market forces work, and let's see what happens.
Sanjeev, InfoEdge hasn't been sitting still, has it? You are committing to adding 1 or 2 new companies each quarter through your VC subsidiaries RedStart and Capital 2B and InfoEdge Ventures. Just give us a flavour of the strategy that you are adopting and what in particular you are looking for in terms of the investments that you make.
So we've got 2 or 3 different pools of capital with slightly different strategies. So Capital 2B focuses on AI, deep tech, early stage. Small ticket to start with, and then we follow on as things look like succeeding. InfoEdge Ventures does early stage, but slightly larger bets than Capital 2B, and it doesn't do a lot of deep tech. It does consumer internet, B2B SaaS, mobile apps, and so on. So we have different teams in each of these, and they're focused on different things. So, but yeah, we end up doing maybe across all pools of capital, maybe 8 to 10 investments every year.
Are you at liberty to say how much capital you are deploying?
So we've got funds, right? So InfoEdge Ventures Fund 1 was, 750 crores, which at that time was $100 million. Fund 1 follow-on was another 750 crores. I think, Fund 2 was, maybe 150 million. Capital 2B was 87 million. So a few hundred million we've committed so far, and we are, the board has committed to another 100, maybe 120 million in InfoEdge Ventures Fund 3, which has to go to shareholders for approval. Hasn't gone yet. So yeah, we continue to invest, maybe $300,000-400,000 a year.
And
sorry, I'm saying I'm so sorry, $30,000-40,000 a year. Yeah.
Understood. And you're also invested in Zomato, Wow, Momo, and Policy Bazaar. How would you rate the performance of those names and those companies? And
they are big success stories,
what does the outlook hold?
Well, there are big success stories, and we're delighted with the way they're done. Obviously, we believe there's substantial growth left, so we are still there. And then let's see what happens, because you got to look at investing in a 5-10 year perspective, not on a every quarter perspective.
Sanjeev, at a broader level, India is negotiating a trade deal with the United States, and JD Vance is going to make an official visit to India. What's your message to policymakers, both internationally and within India? And if a BTA does materialise, then what could it mean for InfoEdge?
So I think anything that helps the business environment, helps our clients grow, helps us grow, because we grow when our clients grow. And the IT services sector is our biggest client segment. Maybe 35-40%, maybe 45% of our revenue comes from the IT services sector in Naukri. And so obviously we want stability, we want predictability, we want early trade deal, an early trade agreement, which is not adverse to India and to Indian companies. Obviously, the US will push for something which works for the US. So we need a middle ground which works for both countries.
What's the risk of no deal? What's the risk that India has to live with 26% headline tariffs?
So I think tariffs, first of all, are relative. So it depends on which other countries got what tariffs, because they're competition for the US market. I also think that if there's going to be general inflation in the US as a consequence of tariffs, there may be some demand contraction. Demand contraction helps nobody. It doesn't help the buyer, it doesn't help the seller. So we're hoping that doesn't happen.
Sanjeev, just earlier, before a conversation with you, I had a fascinating conversation with Rajesh Magawa at Make My Trip. And perhaps not many people outside India are aware, but China-based travel booking company C-Trip is a big investor in MMT. Do you see more partnerships and more two-way trade and flows between India and China, two countries that have been historic strategic adversaries, especially more so in this environment of tariffs?
Well, I do hope that we are able to come to a settlement with China. Obviously, it'll have to be on terms that the government of India would like and what India would like. But more trade between India and China will only help both economies. But the political issues have to be sorted out, at least to some extent first.
Understood. And on a domestic basis, how would you characterize confidence levels amongst business and amongst consumers? So
there's a bit of a stop-start here, where there are some sectors which are very positive and some sectors are not so positive. So obviously, I mean, we are growing at 6% plus, which is a huge positive. But having said that, there are some sectors that are doing well and some are not doing so well.
Just getting back to the hiring cycle among the IT ecosystem, we've been hearing that they are making a lot of hires, a lot of campus hires, picking up these students straight out of college, obviously at a cheaper price point in terms of wages and salaries, but deferring their join date when they join the company. And this, of course, speaks to the uncertainty that continues to bedevil the sector. Is that consistent with what you've been hearing as well?
So I'm hearing some of that, but you see, it normally doesn't assist in hiring at the entry level. So we're not really at the entry level hiring market. We are more in the lateral hiring market. And there, in the lateral hiring market, at least, it's business as usual for us.
Understood. And what's your message to government at the highest level? Because, again, this issue of youth unemployment was really quite starkly exposed during the election. Do you think that we are seeing the right type of policy, the right type of approach? And what I hear is that there is a need to crowd in more private capex and private sector investment as opposed to public sector investment.
I think you need both. I think the government infrastructure push has been instrumental in driving growth. I think as certain sectors slow down, the government stepped in with investment, and that's good. Obviously, you need more private sector investment. You need private companies to fire, on all cylinders. I think to grow at 9 or 10%, all sectors have to be doing well. Government, private, within private, all industries.
And Sanjeev, you've invested in 18 deep tech companies over the past 5 years. Do you think that given time, and how much time do you think it would take for India to realise its global ambition to be a centre for advanced manufacturing or a centre for semiconductor chips and a powerhouse?
Well, it's different in different industries. I mean, semiconductor chips, you need massive scale, you need huge investments. I think to build foundational AI, you need huge investments. Gen AI, LLMs. But if you want to do AI apps, I think we're already on our way there. So I think it's a mixed bag. But in general, over the next decade or so, I would say India should do well.
Sanjeev, on that note, we'll leave it there. Thank you very much indeed, sir, for joining me on Inside India. Sanjeev Bikhchandani there from Info Edge. Thank you. Right, Indian markets are open and trading is well underway. We'll check on the movers in 2 minutes. Stay with us. Welcome back. Some stories on our radar this morning. Russia reiterating its commitment to deep space exploration. President Vladimir Putin saying many countries are keen to collaborate with Moscow, especially China, and that their ambitious plans include missions to the moon and Mars. Trade data from Singapore this morning shows non-oil exports rose 5.4% on year in March, much lower than the 14% that analysts had been expecting. Taiwan, Indonesia and South Korea were Singapore's top export markets, while exports to China declined significantly, sinking 30% on year. Singapore, meanwhile, creating a task force to address the impact of the US-China trade war, with Deputy Prime Minister Gan Kim-yong warning the country cannot rule out the possibility of a recession this year.
Those who have manufacturing operations in China or sell to manufacturers in China for onward sales to the US are already seeing cancelled orders or deferred orders. This dangerous game of brinksmanship between the US-China also risks greater tension that can easily spill over to other countries and other areas.
US-China and global uncertainty were a central part of the debate yesterday between Australian Prime Minister Anthony Albanese and opposition leader Peter Dutton. The country heads to the polls next month on the same day as Singapore, May the 3rd.
He knows that he's got it wrong again in relation to national security. This is a government that's ripped $80 billion out of defence. And we've seen the relationship in relation to Indonesia and Russia grow closer.
When President Trump made the announcement that every single country in the world will be hit with tariffs, the alternative Prime Minister suggested that we should put defence and our defence relationship with the United States on the bargaining table.
Indian markets have joined the trading day, and the Nifty 50, the benchmark, looking just slightly softer to the tune of about 0.4%. However, the Indian rupee is firmer against the US dollar at 85.55. And shares of Indian IT major Wipro in focus after the company reported a 26% year-on-year jump in net profit. Wipro forecasts weak first quarter revenue and warns of cautious clients amid the tariff flip-flops. The IT player now expects a revenue decline of between 1.5% to 3.5%. Another Indian IT major, Infosys, is expected to report its quarter Q4 numbers today, where the company's net profit and revenue are likely to drop. In the meantime, in China, retailers Shein and Temu both warning customers that ultra-low prices won't last and that prices could increase from April the 25th next week. Both websites have gained a lot of popularity over the last few years with their cheap goods escaping duties through de minimis exemptions, and that's now changed because of Trump's recent escalation. Emily Tan got the chance to talk to the Shenzhen Cross-Border E-Commerce Association, which represents over thousands of smaller Chinese sellers, and asked her how the escalating trade war is affecting business.
We conducted some surveys on some 228 companies, and we found that very few of these companies are currently optimistic. Everyone is very pessimistic. 60 to 70% of the companies are taking a wait-and-see attitude, while some companies are actively developing markets in other countries. In another situation, according to the survey we did this morning, customers are still continuing to ship goods because they have noticed that even though the U.S. is now under high tariffs, if something is out of stock, there will definitely be an inflation. And goods from other countries cannot be sold to the U.S. immediately. So there is a 4 to 5 month period of price increases for goods. So companies are also quickly seizing the American market. We have seen prices on our platform increase by 30%, and at the same time we have seen that many platforms have stopped purchasing in China. We think that in the next 2 to 3 months, there will be a period of rapid rush to purchase goods for the U.S. and an opportunity to seize the market.
Elsewhere, we are tracking some central bank meetings today. The Bank of Korea holding rates as expected as policymakers weigh the fallout of the U.S. trade war, but it was not unanimous, with one member dissenting, seeing the need to respond to the worsening economic situation. BOK not ruling out an economic contraction in the first quarter, as it also remained cautious about foreign exchange volatility and household debt levels. This is what the Korean currency is doing against the US dollar. Dollar won rate at 1,418.35. Also watching the single European currency euro as the ECB meets today. Euro dollar at 1.1365. We are seeing some weakness heading into the meeting. The European Central Bank widely expected to lower rates again by 25 basis points to shore up growth amid the trade turmoil. If that did eventuate, it would be the bank's 7th straight cut in a year. Moving on, Managing Asia's Christine Tan sat down with Sabine Abuitz, the president and CEO of the Abuitz Group, one of the Philippines' oldest and largest conglomerates, to find out why the company is setting its sights on the country's airport sector.
The airport business is directly proportionate to the number of tourists that come in. It's all a matter of your cost is fixed. So the minute you have more people that go through the it's straight to the bottom line, right? They give you the passenger service charges. So I think for the future of the country, it's something that we definitely want to be in and expand.
How much are you investing in building up your airport assets, and how quickly can you realize the returns on investments?
So when you expand, right? Let's say, like in Dingan, we're going to expand from 2 million to 3 million or 4 million passengers. You only expand when you're getting the passengers. So you know they're coming, and they give you a a different passenger service charge when you expand. They pay for it. So it kind of pays for each other. Then you have land around those airports that you can also develop for different...
So there are lots of opportunities.
There's lots of opportunities. You can build hotels. You can build attached... I mean, there's everywhere in the world.
So you've got 3 airports now in your portfolio.
Yes.
Looking to add any more?
I have to wait for the government to see what they're going to privatize, right, and how they're going to do it. But Davao, for example, is a big airport. The operations of the airport is going to be up for privatization sometime this year or next year. And then they're going to do, I believe, Iloilo, Zamboanga, Puerto Princesa.
So you want to be a major player in this space, in the Philippines?
Yes, in the airport business, absolutely.
And for more of Christine's exclusive interview with Aboitiz Group's president and CEO Sabine Aboitiz, catch it on Managing Asia at these times that you can see on your screen. I do want to bring you up to speed with some heavy selling that's going on in the Indian IT stocks. Wipro, after its results, disappointing numbers as far as the market is concerned, down by almost 6%, and heading into their latest set of earnings, Infosys is down by 1.4%, and losses in the realm of between 1 and 3% for the rest of the IT sector, which no doubt is going to be a drag on the Nifty 50. That's it for the show today. Next week, we'll keep tabs on US Vice President J.D. Vance's visit to India, and also an eye on the markets with Ruchit Mehta of SBI Mutual Fund and Hiren Dasani of Goldman Sachs Asset Management. That's all the time that we have today on Inside India. Do keep watching CNBC. Dan Murphy is up next with Access Middle East.